So a few weeks after Brexit, and apparently we've entered the era of rental. And here to talk about this is Stephen Johnson, MD of Shawbrook Bank. And Stephen, obviously quite a significant shock to many different parties, but from Shawbrook's perspective, what's the aftermath in your view for landlords?
Yeah, I think everyone, the immediate aftermath was kind of, strong uncertainty, lots of information to try to process. I guess for 5 or 6 weeks, slightly further down the line, we've obviously managed to get a new government and get a new prime minister. That was all done quite quickly, which I think was quite helpful, just to sort of provide a little bit more stability. And I think, people are a little bit calmer. We've certainly not really seen a massive change in customer behaviour or investor behaviour. We didn't see any cancellations coming out of the legal pipeline. There's still activity going on. We've done quite a lot of work with a lot of clients. And by and large, I think people are sort of saying this could be quite opportunistic. There's a chance to probably buy, some of those properties that you were, thinking of adding to your portfolio cheaper than you could have done a month or 6 weeks ago. I think if you kind of step back and look at the long-term opportunity, it's still as compelling as it was, and you can probably, get that a bit cheaper than you could have done before. I think you can also make a case for rents possibly being supported by what's happened. I think you could see less supply of housing coming onto the market. I think people that were thinking of selling their house may now think again, because it's probably going to get less than they thought. I think you could see some of the developers stopping some schemes, not bringing some of the schemes through that they were going to bring through. So I think supply could continue to be constrained. You could see people deciding not to buy and just hold off and see what happens to value. So again, that means they'll probably rent for a bit longer. So I think net you can probably see it being quite beneficial to sort of tenant demand if you're a landlord or an investor. Obviously, I think transactions will soften a little bit just because people get nervous and a bit more cautious overall, but interest rates have just got a lot lower again in terms of expectations for how long they're going to stay low. That will underpin prices for me, property prices. So I think that and the lack of supply will probably offset any sort of deterioration in property value. So I think if I was a professional investor, I probably think I've got a better opportunity to buy now than I probably did before, taking that long-term view.
It's interesting that you just finished there with mentioning professional investors, because I clearly think that this kind of post-Brexit property landscape is really going to favour them perhaps more than the amateur small landlord or the landlords that's kind of just on the fringes thinking, oh, maybe I'll dip my toe in. Are you in agreement with that?
Yeah, no, I think that's a fair. I think the professional landlord community is their business, it's their core activity, and they're in it, they've thought about it, they're committed to the business model. I guess if you're kind of emerging or you're starting to do it, all of the uncertainty, all of the noise around it, not to mention the kind of changing tax environment, I think it all adds up to sort of probably changing your mind really, and that should mean there's probably less activity possibly and less competition on some of the properties where, if you look back, prices were probably getting bid up a bit too much because people were in a little bit of a bull market really. So yeah, I think those that have got confidence in their business model and are happy to sort of enter the market at a price, you might not get it at the bottom of where the market's going to be, but then no one ever really calls the bottom of a market. And if you're waiting to call the bottom of a market, then you're probably going to miss it anyway. So I think those landlords that know their model, that know the returns they're looking for, have got a long-term perspective, they're willing to sort of, I think they're more likely to have the confidence to trade than maybe someone who's starting to build a portfolio.
Do you think if we combine the post-Brexit property landscape with the looming threat of obviously Section 24 starting to come into effect next April, is that kind of like the elephant in the room really? Do people need to look at those two things together when working a plan forwards, don't they?
Yeah, I think there's a lot of things happening to the buy-to-let market in the private rented sector. Clearly, the interest tax relief is the biggest change. Stamp duties happened, and to be fair, most people have forgot about stamp duty in some ways, and the market for me has absorbed that. And we've seen in the latest survey that we've done that most customers and most investors have just reflected that in their purchase prices. So I think that's kind of been and gone. Obviously, Brexit, what does that mean for property values? What does that mean for the supply of housing? What does it mean for the tenant demand? Will we see a shrinking population? Actually, we're going to have the second biggest population in Europe in the next 3 or 4 years. So I don't see any of that really dramatically changing. We're not going to start the population isn't going to start shrinking. People aren't going to start leaving, I don't think, in mass droves. We might not get so many people maybe coming in. And interest rates now are much, the environment for interest rates is now very different to before the vote. So there's lots of factors, and I guess there's lots of stuff for landlords to process. You've got the underwriting standards in buy-to-let consultation currently underway, and that will be coming in, and that will result in lenders providing lower levels of debt based upon a correlation to rental income. So that you're going to see slightly lower debt levels, which again is another factor. So that may have an impact on the pace of growth that people can grow at, and also the types of landlords who can still grow. Those that have got comfortable equity cushions, material equity in their portfolio, they can continue to leverage that. If you're kind of new and starting out, you're probably going to find it a lot harder because actually you're going to need a lot more equity than you probably would have done before. So there's lots of things affecting the market, but you strip it all back, and good quality rental accommodation provided by professional landlords is an increasing part, and it's got a very important role to play in UK housing. You've got 20% of the UK now rented. I don't see anything changing that number. I see it going up. So I think whilst the environment might get a bit tougher, the underlying opportunity and I think the underlying investment case is still very compelling.
Just quickly on the Section 24 topic, your survey, recent survey, which we are going to be sharing with the Property Tribes community, has shown that there still is actually quite a scary lack of awareness amongst the impact with landlords. Could you give us some insights into that?
Yeah, so we do regularly 6-monthly customer surveys and barometers, and we're grateful for any of the viewers and subscribers who've responded to us on that. And it did show nearly 40% of the respondents still were unsure of the implications or did not know. So unsure, did not know, slightly different, but so that's still quite a large proportion. Of those that were fully aware, they said to us that 30% were planning to raise rents, 35% were planning to use limited company structures increasingly in their property strategies. About 14% said they were planning to sell property, and then the balance was others. Yeah, I think what people always anticipated would happen is a lot of those tax relief changes will manifest themselves in higher levels of rent, and a greater proliferation of limited company structures. So that seems to be, I think, what will be the consequence really.
So just to finish, Stephen, on this kind of Brexit stroke Clause 24 kind of environment, do you have an opinion on the strategies that are probably going to work best in this environment? Because there's talk of HMOs becoming a good strategy for this, also buying up north for greater yields, obviously holiday lets. I know that's not an area that you deal with. You do deal with holiday. Oh, well, there you go. I've learned something new today. So do you have any kind of opinion on the kind of strategies that are going to work well in this sort of uncharted waters?
Yeah, let me answer that maybe another way around. I think landlords need to realise, I think, that you're going to not be able to borrow quite as much as you did in the past. That your costs are going up. Ultimately, interest tax relief, interest rates going up when they do eventually go up. Other selective licensing, generally the costs will be are increasing for landlords. So they've kind of got to reflect those two factors in their strategies. Now, whether that means they decide to look for higher yielding properties, whether it's kind of a multi-unit property or an HMO strategy, I think each landlord's got to kind of just figure out what's right for them. But I think that the message to people is, have a strategy that reflects that your costs are going to be higher than they have been. And if you think that you're going to continue to maintain the cash, the profitability that you've enjoyed in the past, then you probably need to think about that quite hard, because the cash flows are changing for landlords. And I think we've had a golden period. And I think I might have said this on one of your threads before, but base rate's been on the floor, rents have gone up, capital values have started to grow quite materially, so the yields are shrinking before they weren't. So you had a wonderful period where the cash flows were really, really favourable. And actually, as you go forward, I think you can see that that difference between your interest and your mortgage costs and the yield you're getting shrink, because your interest tax relief is changing and rates will go up at some point. So I just think landlords need to know and not be sort of naive to the changes in their economics of their portfolios. And I think as long as they understand that, then they can figure out what's the right strategy for them. So for some it may be slightly rebalancing their portfolio, selling some property that's low yielding, but they've got a good capital gain. They might want to reinvest that in a higher yielding property. It may be they slow their rate of growth, or they slightly deleverage, sell one property and pay off some of the mortgage debt within the portfolio. So it's not always about growing, sometimes you might just have to rebalance.
And you're very keen to stress that people should get professional advice as well, aren't you?
Oh, very much. Certainly on the tax
Tax
test. Yeah, I mean, you guys talk a lot about having the right team around you who you can really rely on to get the legals right. I think it's right to get the right broking advice, the right finance advice, obviously the right lender partners, the right property partners. But I think the tax partner is probably the most important of that team right now, depending on what your ambitions are. But you must get good advice and just be cautious around any kind of schemes or things being promoted that offer easy ways out of Section 24, because I think people just need to be very cautious about any of those.